Please welcome our next session, a deep dive into crypto derivatives.
Well, great. Why don't we get started? As we said, the program is a deep dive into crypto derivatives. It's great to be here at the beginning of consensus, right? Everyone's bright-eyed and bushy-tailed versus on a Friday afternoon, people are kind of dragging. So it's like the first day of school. It's good to look out on the crowd. We have an august panel here. We have Nicola White, the CEO of B2C2. We have Giovanni Vicioso from the CME, affectionately known in the industry as Gio. And then we have Simeon Hyman from ProShares, the ETF. So my name is Bob FITZSIMMONS. I'm the moderator today. I'm an executive vice president at Wedbush Securities. I run what's known as the fixed division, fixed income, currencies, commodities, and securities finance. And Wedbush prides itself, I understand it's the 10th anniversary of Consensus. Back in 2014, Wedbush was the first firm to write a research report on Bitcoin. And we were one of the first firms to embrace the clearing of Bitcoin futures. And I think, and Gio was confirming, we're the largest derivatives clearer in crypto. So why don't we quickly just go down the line. Simeon, we'll start with you. Give an introduction of yourself to give context for everyone in the audience here.
Sure. My name's Simeon Hyman. I'm the global investment strategist and the head of the investment strategy group at ProShares. We're about a $65 billion ETF issuer. And for those of you here, probably the thing you know us for, we were known for a lot of things, but if you're here, you probably know us for ticker BITO. We were the folks who launched the first Bitcoin futures ETF.
Gio?
Hi all. I remember attending a Consensus back in 2018. Back then it was held on one floor of the Marriott Marquis Hotel in New York City. There were probably like a few hundred hoodies walking around, and look at this now. I'm Giovanni Vicioso, global head of cryptocurrency products at CME Group. We offer futures and both Bitcoin and Ether, as well as options on those futures. In partnership with CF Benchmarks, a regulated entity by the UK FCA, we also offer 50 reference rates and real-time indices across 22 different coins. And for those of you who aren't familiar with CME Group, we are the world's largest derivatives exchange. We offer futures across the world's major asset classes, including cryptocurrencies, and we are the place where the world really comes to manage risk.
Nicola?
Thanks, Bob. So Nicola White, I'm the CEO of B2C2. I dare to say B2C2 is the largest liquidity provider in the world in crypto. It's hard to make that claim given there's not a public tape. Maybe we'll get into some of that, the difference between regulated and unregulated environments. We make markets to the largest institutions in the space, so we don't face retail. We're primarily looking to put our capital to work to facilitate liquidity in the space in both spot crypto and crypto derivatives. We offer products ranging from NDFs, options, CFDs, funding, and then clearly spot crypto. And we make markets in 31 coins globally, 24 in the US, clearly given some of the regulatory differences between the US and our global businesses.
Well, great. So we don't have a lot of time, and so we're going to break it up into 3 segments. We're going to talk about where we are today, the product, and where we're headed. And so we'll jump out with the first question. So given the recent news in the market, and we're laughing because on the side, the news is just breaking constantly, right? In the last 24 hours, there's been a lot, let alone since Consensus last year. So to the group, what shifts have you seen in client adoption of crypto derivatives since the start of the year? In particular, have institutions changed their risk management approach to crypto? So Simeon, why don't we start with you and we'll just work our way down.
Sure. What I find fascinating about what's happened in the first 4 or 5 months of this year is that we know Bitcoin's gone straight up. But while it's rallied 75-odd%, that's been an environment, forget the fact that the equity markets have been volatile, but in the Bitcoin infrastructure and crypto infrastructure, exchanges, the adjacent financial institutions, that news flow's got a lot of hair on it. So all that stuff's got hair on it, but meanwhile, Bitcoin's going up, and that's prompting a lot of folks to say, hey man, that stuff people were saying about like store of value and diversifier, maybe that's right. I mean, I don't want to say stunned, but appreciative of the fact that Bloomberg just a few days ago wrote a piece saying, hey, we ran the numbers, the optimal allocation of Bitcoin in an asset allocation is 1 to 1.5%. I mean, that's when you run the numbers. If you have a volatile thing that's not doing what everything else is doing, it's got a really potentially powerful role in a portfolio. So that, I think, defines what's happened this year. A lot of chaos, in quotes, in the infrastructure and all this stuff going on, and meanwhile, Bitcoin's going up. And that's prompting folks to think about, how do I incorporate it, how do I access it, and all the reasons we're all here.
Yeah, for sure. And to echo that, I think when you look at all the things that happened last year with the failure, say, of Terra Luna, the implosion of some very prominent, say, crypto firms such as Genesis, BlockFi, culminating, say, with FTX late last year. All these things that happened were really specific, say, to companies, specific, say, to perhaps a lack of risk management at these companies, and really little to do, and to Simeon's point, little to do, say, with Bitcoin and other cryptocurrencies. We did see some gyrations in price, like Simeon just mentioned. We're currently going through a price rally with Bitcoin being up almost 70%. But one trend that has been emerging is that we see now institutions really looking to manage risk. Right, and what better place, say, to manage risk than CME Group? We've been in business for 170 years and really helping clients manage that associated risk. And particularly since the FTX implosion, we're now seeing, say, more institutional clients looking for regulated platforms, regulated products, and we're seeing some of those clients now coming to our markets. And as a result, we're seeing growth in both volume and open interest.
Yeah, and I would echo what both Simeon and Giovanni have said, right? We called around after November's events to our clients and our prospective clients just to get a feel for, what did they need? And, none of our clients said we're pulling out of the space or we're thinking about not going into crypto. If anything, what they said was, we want to take a deeper dive in. We want to understand things more. How do you think about managing risk? How do you think about compliance? And that for us is a very encouraging conversation to have. We're happy to dive as deep as our clients want to dive into topics like that. And I think it's good for the industry to talk about it and talk about what's best practice, right? There's no clear defined regulation yet, or there's lots of gray lines out there, especially in the US. And I think for clients, talking about what's best in class, how do we think about setting the bar until the bar is set through regulation?
Yep. So let's continue with this thread, and I'll come to you, Gio, in terms of where are we with this journey of crypto institutionalization? Are institutions embracing it more or kind of moving away after all this news in the past several months? And what are some of the challenges institutions are facing in the crypto space?
Sure. So we launched Bitcoin futures back in December of 2017. We started, seeing some of the traditional proprietary trading firms that are active, across CME's other products, right? So those participants were present in crypto or in Bitcoin since the beginning. We also started seeing, some of the crypto native platforms, some of the crypto-focused firms look to invest. Beginning, in the summer of 2020, we started seeing some more of the traditional, institutions, and by that I mean some of your macro hedge funds really begin to dip their toes in the space. And of course, following up on what I said earlier, we started seeing more of a shift of those institutions into, regulated products beginning, late last year. But I'd say that we're still at the very early stages of this institutional development. Whereas we've been benefiting, from rise in volume and open interest, we're trading upwards of about $3 billion a day across, Bitcoin and Ether futures. We've seen 25% growth in volume comparing, Q1 this year to last year. And we're also seeing very strong growth in open interest, where open interest is up about 40% compared to last year. So we are seeing, say, institutions come in, but I'd say that it's still early days because we still haven't seen, say, the larger pension funds or the larger, say, money managers really begin to allocate in the space. And once that trend goes, I think that we'll see this market really begin to explode.
Simeon, you'd like to add anything?
It's back to this challenge. Even before November, if you go back to last May, the largest U.S. crypto exchange had to disclose that client accounts would likely be commingled in the event of a bankruptcy. Nobody expects that. That's not what happens to your stocks. And so that really poses a challenge. If you see the underlying use case, how do you access it? And there was the guy who lost his wallet on his flash drive and was digging through the dumpster in his town for like 10 years trying to find it. And that's what the derivatives market has offered, a cleaner, regulated way to get access to that underlying. And listen, the other stuff will sort out, but it's not sorted out yet.
So, and when you brought up the launch in 2017, I remember it well. Everyone was fearful that the market was just going to run up to infinity, right? And we ticked at like 20,000, and then we traded off as miners came in hedging their production, much like the commodities markets, and the futures markets did what they're supposed to do. So I remember that well. Let's go to the third question here. We'll start out with you, Nicola. How has the derivatives landscape shifted over time to make institutions like the banks, the hedge funds, asset managers getting more comfortable with this marketplace? What are we seeing from them today?
Yeah, look, I think for them it was a really good entry into the crypto space, right? If you talk about cash-settled derivatives, all the complexities that they're not used to, where you have to deal with the blockchain, you know, you're worried about, to Simeon's point, like how do you protect your keys? What does that look like? That's all stuff that traditional finance firms can't even, like, they're just starting their journey about how do they get there. So derivatives for them was they were products they understood. They were cash settled, so you know they have bank accounts. Maybe a novel thing these days in the crypto space, but they had bank accounts, and their systems and their risk managers knew how to risk manage them, and so that's what kind of I think started the evolution of the derivative space. And now you've really seen it evolve into. I mean, we talk about what happened at Consensus last year. The number one conversation I had at Consensus last year with clients was, well, my portfolio is down 20%, how do I hedge it? Well, when your portfolio is down 20%, it's probably a little too late to hedge it. So, you know, how do you think about using options as a tool to hedge a naturally long portfolio, right? I think those are some of the things that you're starting to see from the crypto native side. And then from the traditional finance side, just, I would say, you know, breadth of product, right? New coins. There's definitely, I think, an appetite that has been stalled by last year's events for NDFs in the US. And so I think those type of products you're going to see come into the space relatively soon.
Good. Gio?
Yeah, and you know, with our products, what's great about, say, Bitcoin futures, Ether futures, is that for anybody, say, that's traded at CME contract, these products are familiar. They're going to be set up the same. So that same way that you would trade, say, E-mini S&P 500 futures contract, index base, Bitcoin futures is going to be very similar to that. So there's a commonality, say, in that experience. If you're new, say, to CME's markets, you're going to benefit, say, from what those other institutions are already benefiting from. But you're going to benefit, say, from having segregated accounts, right? Not having to deal, say, with auto liquidations that you see, say, across some of the unregulated derivatives platforms, crypto derivatives platforms, right? You have the safety that CME Clearing acts as that central clearinghouse. So we are the buyer to every seller, the seller to every buyer. Right. You also benefit, say, from price controls and span margining, as well as velocity logic. So we can look at the market and see how fast is that market moving, how much has that market moved, and we could slow down the market if needed to allow that market to collectively catch its breath, right, and not cause, say, a further run on prices.
Usually I'm not sitting next to you, Gio, so I get to say what you just said, so I can't say it again, but you almost can't say enough. I mean, it's a central clearinghouse. Counterparty risk is managed. You post margin. It's regulated. There's all this important stuff over there. But I'll say one thing that you didn't say that's important too, and that is the maturation of Bitcoin futures since the launch. When we launched BITO, we launched the ETF, people are all worried about what's called the roll cost. How much does it cost to go into next month's Bitcoin contract? And cash settled, right? So Bitcoin is not oil. It is not stored in tankers around the world. There's nothing going on there. So therefore, what the textbook says is the premium from this month's contract to the next must be approximately equal. Go look at the treasury curve. That's got to be what it is. And it's actually turned out to be that way. It wasn't in 2017, but as opposed to the spot and the exchange markets that haven't matured yet, I would put forth that the Bitcoin futures market has matured very, very nicely, and that's important.
Yeah, and that segues nicely into the next point I'll throw to Gio and Nicola here. How are the traditional, sort of the spot exchanges, how are they evolving? And how does the different market structure create opportunity? I know when the product was first launched, we spent a lot of time trying to educate firms on the concept of the basis, right, which is as old as you can get in the futures arena, right? The difference between the spot versus the futures, and it was just so foreign, and we found it quite comical that this was a foreign concept. So tell us what you think in terms of the spot exchanges, what the opportunities there for the product.
Yeah, sure. So, when you look at this market, right, and what we're seeing, right, we have ETFs now led by BITO, right? We have, say, spot exchanges offering access, say, to cryptocurrencies. We have CME. You also have, say, some of the unregulated, say, derivatives platforms. The ecosystem itself is just growing, right? And I don't think it's a winner-take-all type scenario. It's really the interrelatedness of all these different markets, all these different access points. CME, say, providing the base where clients, say, can go manage risk. But in addition to that, CME products would also be used for exposure as well, right? But it's really, say, how those markets relate to each other, and how, say, like a B2C2 can provide markets across all these different platforms. So depending, say, on where that client wants to trade, there is plenty of access points for that individual.
And I also think it's important that clients think about, what's their risk appetite when they're trading on any of these platforms. When I started in the space a couple of years ago, my first question was, okay, unregulated exchanges, what's their control function? Do they have like limit up, limit down? And literally, it was some of the controls on some of the exchanges are non-existent. And then you have regulated spot exchanges, right, which are relatively new and upcoming, and they're developing, and they have some of those controls that we're used to seeing in traditional finance. But on the flip side of things, for firms that are in the traditional finance space and offering products, I think access is important, right? And I think that we've come a long way in terms of FCMs offering crypto access to crypto native clients. But with some of the regulatory issues in the U.S., I think there is this like hesitancy, or there is every firm has kind of a different bar, I would say, that you need to meet. And one of the things I would love to see in this space is just more standardization, or FCMs getting more comfortable with crypto risk, because it is cash risk, right? You're not touching Bitcoin. I get that some of the firms are crypto clients. And with some of the banking stuff that's gone on recently, look, there's a little bit of hair on that. But I do think that you're right, Gio. There is this gap that needs to be spanned between spot crypto exchanges and futures exchanges right now, because the access equivalent isn't there in the market. But I'm sure you've seen that evolve over time, whereas it was probably only traditional finance firms that originally had access to Bitcoin futures.
That kind of leads into the next question, discuss the interplay within the cryptocurrency ecosystem, right? The spot exchanges, derivatives exchanges, the lending platforms, the ETFs, OTC desks. Why don't we start out with Simeon and work our way down?
Sure. Well, we saw an opportunity to take advantage of the regulated, well-functioning Bitcoin futures market, and we launched BITO, our Bitcoin futures ETF, back about 18 months ago. We raised about $1 billion in 2 days, which just said, hey, this was a solution folks were looking for. I've described the approach as belt and suspenders. Raise your hand if you understand what I mean by belt and suspenders. Okay, so my marketing guys were right. They said you have to stop. Nobody knows what that means anymore. But it's 2 layers of regulation. You have the regulated futures market, and then you have the regulations around the ETF, which is a plain old 1940 Security Act thing, and you can just buy it in your brokerage account, a super elegant solution. And the thing that made it work so well is that maturation of the futures. So once those roll costs were in line with the short-term financing costs, that means that BITO tracks the spot price of Bitcoin really, really well. And just to put kind of a bookend on this, we then subsequently launched BITI, which is our short Bitcoin exposure ETF for those who need easy access to a hedging solution. And we think this is put forth a solution that folks needed in the marketplace.
And before, Gio, you jump in, I don't know if everyone caught that. He said they raised $1 billion in 2 days. We'll come back to that a little bit later, but he kind of glossed over that as that's standard operating procedure. Sorry, Gio, go ahead.
Yeah, and just adding back going back to say the interrelatedness of the markets, right? When you look at our products, they're cash settled products. Our products are based on say underlying Bitcoin Ether activity on spot exchanges, exchanges like Coinbase, Bitstamp, Kraken, to name. We have 6 constituent exchanges that we track the price. That is the basis, say, for our contract, right? Our contract now, with ProShares and other, say, Bitcoin ETF providers, Bitcoin ETFs are based on CME Bitcoin futures contracts. So more interrelatedness there, right? And when we look at the growth, that Simeon mentioned on the ETFs represent a large portion, say, of our open interest. But if we scale back and look, earlier I mentioned that our open interest has grown, say, 40%. When we look, say, when we pull out, say, the representation, say, from ProShares, 70% of that growth is actually coming outside of the ETFs. So we do see growth in the space, say, beyond, say, even the ETF providers. We are seeing, say, further additional, say, institutions gaining exposure to our markets. And a couple other measures to consider. We've seen growth in what we call block volume. In fact, blocks now represent about 7% of Bitcoin futures volume. So a block is a transaction that's privately negotiated between large counterparties. 7% of our volume is now being transacted as a block. We also have seen growth in what is called the number of large open interest holders. So that's any entity that holds at least 25 contracts. So we're talking about like a $3 million position in terms of Bitcoin. And we hit a high of 122 such holders earlier in the year, and over 400 holders across, say, our suite of derivatives products.
Yeah, I would say, the growth in options on the CME has been really, really encouraging in the last couple of weeks, especially, you talk about that market that goes up, considerably one direction. We've seen kind of options follow in lockstep with their growth, and I would say, to me, that shows a very mature market that is, on its way to developing, and it's not one-sided, right? Like, I think if you were here 2 or 3 years ago, everyone would be talking about holding and never selling, and that, to me, that's not a very healthy market structure. You want that back and forth, and I think we've been really encouraged over the last couple of months by specifically the growth in the CME options product, because let's be honest, there's a lot of options business that happens off exchange. It's not regulated. You don't know what your bankruptcy jurisdiction is, and I think that getting that kind of growth in a regulated onshore environment is really helpful for the ecosystem.
Okay. And maybe just to add to our options growth, right? When we look at options, say, pre-FTX, our open interest post-FTX, like if we just look at open interest for the month of November when the FTX issue happened, and compare that, say, to open interest and options so far this year, open interest and options has more than doubled. We're averaging, say, close to 9,000 contracts a day. Volume increased by 5 times. So these options are based, say, on the liquid, say, underlying Bitcoin futures contracts. But we are seeing, and to your point, Nicola, we are seeing, say, entities now begin to use these products to better manage, say, risk.
Let's say on that theme of options, I know we're short on time here. Any other thoughts, Nicola or Simeon, in terms of the options markets, how we can grow it?
I mean, I would just encourage, so I will say 2 things, right? One, the work that ISDA is doing is helpful, right? Because the one problem that we have with options, so if we're trading options on the CME, that's relatively easy because we get access through our FCM, other people get access through their FCM. The CME is the intermediary there. But if you're looking to do options bilaterally with a counterpart, you need legal documentation that backs that up. And that legal documentation can be quite complex, to say the least. And so ISDA's been doing some work, which I think has also helped the growth of this space. But I would say, every conversation I have with a client, one of the questions we ask them is, how are you hedging your portfolio? Because let's be honest, this is probably one of the more volatile markets I've ever traded in my career. And when you have volatility like that, you want to make sure that you're thinking about downside protection. And so I think it's about education to really, leapfrog the growth.
Yeah, just a couple of quick observations. First, the growth of the options market is really important for the maturation of the entire future space. So as analogously, in the bond market, the development of CDS was super, super important to liquidity in the bond market. And just like in that market, there's a lot of evidence that the futures actually, Bitcoin futures as an example, incorporate information into price faster than the spot market. Remember, there's not one spot price for Bitcoin. There's like lots of them. That's really, really important. Also, just as a kind of a sentiment thing, what we've seen when we launched BITI, if you look this last 4 months or so this year, our flows have been kind of even on the BITO on the long side and in BITI on the short side. We've seen about even flows this year. So we certainly know that there are people who, look, if it goes up 75%, okay, now there's 75% more dollars that somebody might want to hedge. So the need is out there.
So I want our audience, where time is ticking down, to give some thought on some questions, because I'm going to come at you probably like in a minute here to see if anybody wants to ask any questions to the panelists. And I'm going to bounce around here. What are some of the headwinds and challenges that we're facing in terms of the development of the marketplace? And I don't know if you want to highlight between regulated versus unregulated. We'll start with you, Nicola.
I would say the biggest headway is regulation, right? I think we really want that line that is drawn and we know which side to stay on. And there's no kind of gray zone that we're operating in, right? And I think it's really important not only from the products that we trade, because we definitely see clients who are reluctant to get in to trade a coin based on some comments that were made. But I think that solid black line that we can stay very far away from and we know how to operate in a regulated environment is the biggest challenge in the space right now.
Yeah.
Yeah, I think I'd echo that. Of course, CME is a regulated entity, so we view regulation as a feature, not a bug, right? But I'd say, to your point, right? In order, say, for us to be able to offer, say, additional products beyond, say, Bitcoin and Ether, I mentioned earlier that we list reference rates and real-time indices across 22 different coins. We really need that regulatory clarity on what's a security, what's not. So certainly, more needs to be done on that front. And I think the headwind, I think on the linkages, prime brokerage, for example, where I think we hear about crypto prime brokerage. I think it's still in its very early stages, but I imagine a prime broker would help, say, a B2C2 and similar firms, because in order, say, for you to provide liquidity, say, in our markets, across other markets, you're posting capital across all these different markets. So a prime broker could help facilitate that, and that's something that's missing in the space currently.
We're just fans of education as much as anything else. You're all here, so you kind of know what's going on, but if you take a just regular private client type person, they see a fund that says Bitcoin as an example, that fund might be a bunch of miners and blockchain companies, which is a really important class of investments in this universe, but it's very different than investing in Bitcoin, kind of like gold miners and gold. So we think education's got a long way to go for people who aren't with us at Consensus this week.
So we've got about 10 seconds here, straight down the line. What's the next innovation in the product?
I think expansion into more coins.
Yeah, for us, we're looking to do more things, say, with Bitcoin and Ether. Right now, we're exploring, say, offering the ability to trade the Bitcoin Ether spread directly.
The maturation of other coins, I think that's a big one.
Well, thank you very much. They told me there was a hard cutoff, right, with 15 seconds left. So you've been a wonderful audience. Please give our panelists a round of applause. Thank you.
Thank you.
apology.